Hey everybody, Scott Sachs with the Synergy Group. We're here for our last installment for the 2024 year, going over our RBI statistics for November. We'll be shooting a January video that'll go over December figures because everything again is trailing 30 days from the time that we post this. We want to wish everybody happy holiday season, safe, idyllic season for everybody. Hope you get to spend it with friends and family. Now let's jump into the numbers. As always, Washington, D.C., Montgomery County, and Arlington County are the areas that we focus on. So for Washington, D.C., days on market, the average days on number is 42 days, up almost 13.5%. Montgomery County, 21 days, up 16.67%. Arlington County, 28 days. It's exactly the same amount of days as a year ago at 20 days. So there's been zero move in the days on market, showing inventory is expanding as far as what's sitting on the market. We go over to average sold price. You go, well, if that's the case, we should be seeing a move lower on average sold price. But we're not. Washington, D.C., 912,496, up 5% year over year. Montgomery County, average sales price of $717,000, up 5%. At Arlington, average sales price of $862,524, down 3.84, almost 4%. Now, we go to the actual sales price to original list price ratio. Everything is down. Washington, D.C. down 0.29%, Montgomery County 0.04%, and Arlington County 0.62%. Well, what does all this mean? The story here is two parts, and it's been the same story that it's been for many years now, and that is inventory driven based upon rates. That is the underlying story for our market. Now, other areas of the country are experiencing other phenomenons right now. The 10-year Treasury yield today is 4.244%, okay? Why does this matter? Because the lending rates are tied to the 10-year Treasury. They're not tied to 2 years or 30 years. They're tied to the 10-year Treasury. So if the rate is at 4.244, rates are roughly 200 to 250 basis points above this. So that means that the average 30-year fixed rate right now for a conforming mortgage is roughly anywhere from 6.3 to 6.8% is what you can expect. If you go back and look at just September 10th of this year, okay, we were at 3.644%. That's a delta of 0.6% on the rate differential, okay? So rates have moved up 60 basis points, okay? Why does this matter? Because the Fed has already cut 75 basis points, and this number, this 4.244, already bakes in an additional quarter point cut on December 18th, which the Fed is 99.99% going to do. Now, what we're getting out in the economy right now is a lot of favorable data as far as job growth, as far as earnings from a lot of the companies out there are actually beating expectations into the quarter. And so the stock market is doing very well. We are not seeing inflation come down from the levels that we did in the last 2 months. What that means is the Fed is probably going to pause on any rate cuts in the foreseeable future. This is where we are going to be living with rates. So you don't expect a rate of 4% or 5% unless you're doing adjustable rate mortgage, and we have great lenders that we can refer you to, but this is where we are. So what does that mean? It means that you're not getting move up buyers, okay? So the market is always nuanced across not only jurisdictions, but asset classes. So certain price points are seeing more softening and others aren't, which is this blended average of how we're getting to an average sold price where we are. Because in these price points, the market is still very active and competitive. So what matters here is inventory going into 2025 is going to remain low. We're not going to see a huge increase in overall inventory, okay? Even the days on market here, again, this factors in condos as well, which is driving the days on market up across a lot of these jurisdictions. The fee simple market, townhouses, single families, is still down. If it's priced properly, they are still moving quickly because there is demand for that across our market. Job growth is up across Northern Virginia, DC, and Montgomery County as well. So what do you want to be looking for into 2025? Now could be an excellent buying opportunity for Washington, D.C. Why? because a couple things are going to happen. This isn't a political statement. This is just what we see historically and what may be coming based off policy. And that is, we have a new administration coming in on January 6th. And with that is coming the Department of Government Efficiency. Not only the Department of Government Efficiency, but Elon Musk, who is a big believer in having employees in the office. There is going to be a mandate on federal employees returning to the office around our area, which is a massive component of our economy, including the downtown market. That has hurt Washington, D.C. over the last 4 or 5 years, undoubtedly. Statistically speaking, Washington, D.C. has suffered because of some of those policy shifts. If that shifts into 2025, you are going to see price appreciation across some of these markets. There are areas and neighborhoods of Washington, D.C. that are right now down 20 to 25% on values, and that offers an opportunity for people. If you're considering a purchase in D.C., now is the time. You can lock into an ARM. I have a lot of clients doing 5-year ARMs, and then in the next 2 to 3 years, given economic conditions, inflation pulling back further, and stabilization, you'll be able to refi out. There is going to be opportunity in DC into the new year to potentially buy something. Montgomery County and Arlington, they still remain pretty consistent. You're seeing an increasing supply in Montgomery County, but again, prices are still appreciating, okay? Relative to the original list price, this is still a healthy market we're in, okay? Across the country, there are certain markets that have been impacted by COVID moves, tax-related moves that are now reversing themselves, and you're seeing price declines. This is one of the most stable markets, not only on the East Coast, but probably in the country and maybe even globally right now is our market because of the support we have from a government perspective and economic growth. So now is the time. If you're thinking about making either a home purchase or an investment purchase this year, the Synergy Group is poised to be able to guide you through that process. And now is the time to start. Now is the time to get familiar with your market and understand your buy box, understand what you're looking for, neighborhoods you're interested in, so that we can be strategic and find you a deal that is not only going to be a great home, but also an investment opportunity for you. The Synergy Group is here to invest in you so that you can invest in your future. SynergySoldIt.com for additional information. And please reach out to us anytime if we can be a resource or answer any questions you have about the DMV real estate market.